Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for April 28th and 29th, 2018. For those of you new to our videos, what we try to do here is we take a look at the markets from daily, weekly, and monthly perspectives to give us a better sense of where we are, where we have been, and where we're likely going. And I want to apologize to some of my patrons here, or all of my patrons and many of my followers and subscribers. Over the last couple of months, I've been have been unable to make sector videos due to various time constraints, but after June, I should be able to make 2 to 3 videos a week, and that's my goal. So thanks for sticking by me and following along, and look forward to making those videos in the not too distant future. But let's take a look at what's going on here in the markets this week. Starting with the 10-year Treasury daily chart. So I've been pointing out this beautiful rally that we've had after the bounce off the 50 and the middle Bollinger Band. We had a nice run, and we finally broke above that 3 level. So that's a bullish. That's bullish on the one hand. On the other hand, notice here there was negative divergence here versus when we kind of were at 22.86. So last time around we had more momentum than this time around. So I was not surprised to find that this particular rally was going to be weak, a little bit weaker, and probably a pullback back to the 2.8 area is not going to be outside of the cards. But at the same time, this is a very important development and something to keep an eye out for. Now, looking at this from a weekly perspective, this is a big breakout. We're struggling to break above that 69 to 70 level on RSI. It might take a couple of weeks here, consolidation here above that 2.8 level, but ultimately I think we break above this 3.1 area and ultimately head higher before causing any kind of shockwaves in the market. Now, looking at this from a monthly perspective, here's why I'm very bullish on what's taking place here. We've had this multi-year bottom basing pattern taking place here. We had this breakout here, massive hammer pattern, bullish flag here, breakout. Now we're consolidating right below that 3% level here on the 10-year, and likely we're going to test, in my opinion, break out of this 200-month moving average currently above 3.442. I think we're going to break out above it, shake out some long shorts here, and then probably fall back and consolidate above that 3 zone for a while. But bottom line is Treasury yields are going higher. It looks like the yield curve is being inverted slowly. It's currently flat. And what that means is that the 20 and 30-year treasuries are basically trading at the same rates as a 10-year. So we'll see what happens, but ultimately that's not necessarily the best sign for a healthy economy. Now, looking at gold here, gold pulled back here after inability to generate much momentum here around the 1360 level. A lot of resistance here, as you see. Every time we've tried to hit this area, we've fallen back, but we're finding support here once again around that 40 level of RSI, and now we're bouncing. So let's see what happens at this bounce. At this point, we're in a trading range between 1300 and 1350 until anything happens one way or the other. We're range bound. But I will point out, potentially for another video, but I'll point out that gold miners are actually acting strong. This entire basically from 1238 all the way to here, gold miners had been weak. Now with gold actually pulling back, gold miners are starting to find strength. That's a very bullish development longer term for the metals market. On the weekly, you want to see gold bulls want to hold this 50 level on the RSI. If we can't hold that, then it's possible we pull back all the way to 1300, possibly even as low as 1280. But this 50 area is a must hold for the bullish case to hold here. On a monthly basis, still we're in very, very clear bullish territory. This is a breakout that will likely see a retest of that 1900 level at some point in the next couple of years, but it just takes some time when you look at it from a long-term perspective. Looking at the junk bonds here, we had a nice run here all the way to 1336.22, pulled back, found some support at the 200-day moving average, but finding resistance at the 50-day RSI, 58 level RSI. So we'll see what happens here. If it can't find strength, then this might ultimately lead towards a breakdown and ultimately retest of that 35-20 zone. So which would not be a good sign for the markets in general. Junk weekly, still struggling, currently right below the 50 RSI level on the weekly, but finding support on the 50-week moving average. It's still kind of directionless. We'll see what happens. I will point out the PPO is curling towards a break above zero from the downside, so that's a positive development. This is one that's kind of fun to watch, but now my hunch is that we're going lower, but it could go either way. Now looking at crude oil daily, crude oil still is consolidating here, but it's not building momentum, and that's something that you want to be wary of if you're a bull. PPO is curling towards a break below zero from the upside, so we might have a pullback in crude all the way back to possibly that 62 level in the coming days and weeks. Looking at crude from a weekly standpoint, here it's in bullish territory so long as it's above that 61 RSI level. That's a positive development, but you want to see this consolidation ultimately break above 70. You want to see it happen pretty soon. PPO on the weekly is above zero, so that's a positive sign. Let's see what happens in the next coming days. And on a monthly level, it's breakout mode. So daily looks a little bit weak, but could go either way. Weekly and monthly look very strong, and it looks like 80 is the next price target for crude oil. But when you look at the markets, you've got treasuries looking like they want to run higher, and you got energy looking like it wants to run higher. That's going to be very inflationary for the markets, but it's going to be very challenging for the markets eventually in terms of growth. Now the Nasdaq daily, it seems like it can't break above this downtrend that's been developing on the daily chart. As far as I'm concerned, it's range bound between about 6,800 and 7,600. Pretty wide range right now. But until this particular trend line breaks higher, I would assume that we're going to go lower in the short run. But we'll see what happens. I'm keeping my eyes open for what may come ahead. If we break out above here, that's when you want to go bullish on Nasdaq weekly, same thing. We're still finding trouble here on this RSI resistance, so we'll see if this is a consolidation for a move higher, or is this kind of a inverse head and shoulders. Very interesting to see what happens looking back. Monthly, kind of nasty. Bearish wedge breakdown, but again consolidation. Maybe we move higher, maybe we continue moving lower. PPO is curling towards a break below zero. Stochastics are rolling over, so I'm leaning towards a eventual breakdown, but I'm open to both perspectives. The Russell 2000, not much to see here. It's just kind of consolidating. PPO is breaking below zero, so unless it can recover this very soon, I think RSI will break below 50, and we might have another pullback in the markets. But on a weekly, it has some legs, and there's a lot of support right beneath it. So weekly, I would just say this. This is not a market that you want to be trading longer term because it can go either way in terms of the volatility. The monthly, I will point out here that PPO has broken or is just about ready to break below zero. So that's a very negative development in terms of how the moving averages are converging or diverging. The S&P daily looks like it wants to move to the upside. It's probably found strength amongst the banking names with the interest rates and energy names, so that's probably why it's curling higher versus a lot of the other indices are rolling over a little bit on the daily. Looking just at this RSI level, I think we're going to make a run back towards that 2750 level, but we'll see. We're still hovering above that 50 RSI level on the weekly chart, so that's a positive development, but it needs to break higher and soon. Otherwise, this is just going to roll back over and go. And if this breaks below the 50 week moving average around the 25.80 area. And the next price target on a longer term time frame is around 22.30. So that's a big drop should this area not hold. So very crucial area if you're an S&P bull. And a couple more charts here. S&P monthly, we're just below that 69 level, so be crucial, very important tipping point in the markets. Should we rally higher and break above that 69 level, it's very possible we move above 2,800 and possibly all the way to 3,000. Should we not be able to break this level, very likely we head back to that 2,200 level sooner rather than later. Dollar's looking strong, although it's kind of the shooting star candle here to end the week. You know, and no surprise because there's that massive resistance, which I'll point out on the longer term time frame, but on the daily 200 moving average is around that 92 zone. So a lot of resistance here, and it coincides with that 69 level, which is always a very important level of resistance. Looking at it from a weekly standpoint, closed above the week on above the 50 on the RSI, but a lot of resistance here. That's where we pulled back last time from 95. So is this going to happen again? We'll see. But this 92 level is crucial if the dollar is going to have any legs in this particular rally. On a monthly, if it breaks above that 92 level and closes, well, the month's ending tomorrow, so that's going to be interesting to see how the month end plays out. But above 92, that's bullish. Below 90, it's bearish, and that's basically the way the dollar is playing out right now. Volatility right now, not much to see. It's just kind of consolidating. Should the 50 level hold, we'll find some volatility. Should the 50 level on the weekly break down, likely the markets rally. So volatility is acting weak right now, but it's very possible it could turn back around because it's hovering around that 50 level of support. And finally, the weekly on the world indices. Again, there's a lot of indecision in the markets. This is not a trader's market from the standpoint of long-term perspective. Can go either way. That's just the bottom line. And I'll be watching from the sidelines and very interested to see how these things play out. Guys, thank you for watching. Please do subscribe to our videos on YouTube and on StockTwits and on Twitter at Moniology. And if you haven't checked out our page on Patreon, it hasn't been so active of late. I apologize again. But please, any support that you can send our way, $1, $5, $10 a month, would go a long way towards helping us make better videos more often. All right, guys, patreon.com/Moniology. That's the link. It'll be in the show notes. Have a great trading week. Take care.